This tutorial I'll be going through with you Henry Schein stock, and you can just type it in Google and just this information will appear. It's Henry Schein. I hope I'm pronouncing it well. I'm not sure, so it's okay. Please don't mind. It's Henry Schein Inc. and it's HSIC is the Nasdaq symbol. I can buy this for 63.39 US dollars for one stock. It's a billion size firm, which means it's a big size firm. It's not paying any dividend. I just want to point out here that any firm that is paying dividend, that means they're financially very strong because dividend is extra money of the firm. Because after paying the creditors, loans, costs, they still have extra money. So that extra money it pays to shareholders as dividends. But this firm is not paying any dividend. It could be that maybe they don't have extra money, maybe they're not financially strong, or maybe they have extra money, they are financially strong, but they choose to reinvest in their own firm to further expand. So there could be many reasons, but this aspect or this thing is very important to check. Let's go to Wikipedia and see when was this founded. I can see it's founded it in 1932, 87 years ago. Now let's have a look at the employees, what the employees think about this firm. I'll just copy this straight from Google, which is quite easy. Type in Indeed reviews, very easy, and I can see 632 reviews, 3.8 star. Read through the reviews yourself, check out the photos, the jobs they have listed, the question asked, and everything. And I want to go to Glassdoor as well, and let's see the reviews here. That's a brilliant website as well. I can see that we have 591 reviews. It's 3.8 star. Read through, do pros and cons yourself, and check out the jobs listed, the salaries they're paying, the interview questions, the benefits they're giving, and the photos. Please go to Justia Patents, and you can search for patents of this firm as well. Just type it exactly. I just want to point out, please focus on applicant or assignee because these are people who have full rights of the patents. Now I can see that in 2006 they have a patent, 2009, 2012, 2006, and so many in 2006, 2016. That's brilliant. It's a recent patent. Please look for recent patents as well because that means they're still innovating, which is very important as well. So the more patents a firm has, the more stronger it is in the market, and the more harder it is to beat the firm because they are innovating. That's brilliant. And let's go to Yahoo Finance, and I want to see who the key executives are and what salaries are they on. So let's just paste it here exactly, and I will just click this one because this is the Nasdaq symbol, and I'll go to profile. Sorry, I'll go to profile and I can see the sector, industry, and the employees. And the best part is that all their key executives have their salary shown. That means there's a lot more transparency because they have shown all their salaries. There's so much transparency of this firm, so it helps us build trust with this firm, which is brilliant. Let's go to macro trend. Now I want to see the ratios. Go to price ratio, price book ratio, and you can just type in the firm there, and you can just I will explain you briefly. If the price book ratio is less than 1, that means stock is cheap, it's a sale. If the price book ratio is more than 1, that means stock is expensive. The higher the number goes, the more expensive it gets. So right now let's have a look. It's just loading right now. This website takes a little bit time to load because it has a lot of data, but don't worry about it because it will make your life quite easy, so be patient with it. So right now I can see it's 2.73, which means that if somebody buys stock right now, they'll be paying 2.73 times more money. It's 2.73 times more expensive. If somebody bought the stock in 2018 December, they bought it twice more expensive. So they paid $47 to buy something that was $23 worth. Right now it's 2.7 times more expensive. If I see in 2009 it was 1.08 times more expensive, so people paid $12 to buy something that was $11 worth. So you need to be careful, like how much are you paying for the stock. Are you paying a lot more money than you're supposed to? So that's something to really think about. Let's go to other ratios and look at current ratio. If current ratio is less than 1, that means stock is risky because liabilities are more than assets. If current ratio is more than if current ratio is 1.5 or more than that, that means stock is safe. It has a good margin of safety. Please look for 1.5 or more than that. Let's have a look. Okay, so I can see right now it's more than 1.7. Well, it's more than 1.5. It's a safe stock. It has a good margin of safety. That's brilliant. But I just want to see if it is consistent in being more than 1.5. Let's look at, no, it isn't. So I can see that there are fluctuations, but I can see a trend that from 2005 up till I would say up till I would say 2016 September, it's always consistent. It's been 1.5 or more than that. So it's a very safe stock consistently until 2016 September. That's brilliant. But just recently from 2016 December, since then, it's fluctuating. So it's below 1.5, a little bit below 1.5, then above 1.5, and then below, and then just recently above 1.5. So just recently it has fluctuated, but it's up to you to decide. Let's go to debt equity ratio. I'm looking for zero point 0.5 or less than that for it to be have a good margin of safety. So this ratio will tell me if the company is mainly operating on debt or equity. I'm looking for zero point 0.5 or less than that for it to have a good margin of safety. Let's have a look. Okay, so I can see it's less than zero point 0.5, which means that's a safe stock. In terms of margin of safety, that's brilliant. We have data until June 2019, but it's less than zero point 0.5. And I just want to know that has it ever been above zero point 0.5? So let's have a look. I can see that since 2005 March up till now recently, consistently it has been below zero point 0.5. So it's a very safe stock in terms of debt. That's brilliant. And let's go to return on equity. I'm looking for 8% or more than that for it to be very good. Let's have a look. So I can see that it's more than 8%. That's brilliant. Let's look at the previous trend. Has it ever been below 8%? That's my question. So I can see that since 2005 up till now, since 2005 up till now, consistently it has been giving me 8% or more than that return on equity. That's brilliant.